I'm here with UBS's CFO, Tom Naratil, who's here to discuss the fourth quarter results. Hi, thanks for speaking with us today.
Oh, thank you, Catherine.
I just wanted to know, could you walk me through a few of the bigger factors that led to the fourth quarter net loss?
Sure. When we look at our fourth quarter, certainly the primary component of the loss was the litigation provisions that we took in the fourth quarter, primarily as a result of the LIBOR matter. In addition, we also had some restructuring charges in the quarter, which were anticipated in part of the plan that we had to accelerate the strategy of the group, in particular by focusing on certain business lines in the investment bank.
Doesn't seem to be all bad, though. You're buying back 5 billion Swiss francs in outstanding debt securities. What makes you able to do that?
Well, you're absolutely correct. We had great progress in the fourth quarter on our risk-weighted asset reduction, as well as in reduction in our funded balance sheet. And that certainly puts us ahead of our plans in a position where we actually can do some more work on the liability structure we have in the balance sheet. And so specifically, we're announcing our intention to call one of our hybrid Tier 1 instruments, a 995 million euro deal that has its first call date in April, in addition to announcing the up to 5.25 billion Swiss franc tender offer that we announced this morning. So one of the advantages of making better progress on the non-core and legacy asset reduction is the ability for us to take out some long-term debt and reduce our net interest expenses.
Is that taking out long-term debt going to have any effect on your future earnings?
Well, it should have a positive effect, most certainly, on our future earnings. It's also, one of the things that we're focused on as part of the acceleration of the strategy was clearly the advantages that we'd get from running a smaller balance sheet and also a mix in our liability structure that's actually more deposit-rich than the structure we had previously.
We've heard a lot about some of the tax disputes Switzerland's having with a lot of its, especially European Union neighbors. Has there been any effect to that on your private bank's net new money or business overall in the fourth quarter?
So if we look at our net new money flows in 4Q, we continue to see great growth in APAC, the emerging markets, and the ultra-high net worth client base globally. We did see outflows in Europe, in particular in offshore Europe during 4Q. And we'd certainly say that as a result of a lot of the discussions in the press, certainly around a number of tax treaties and their progress, we did see clients, begin to think more about regularizing their assets on their own, with or without a treaty.
Are the outflows any cause for concern, or is it a natural consequence of the debate that's going on in the public?
It's a natural consequence of that debate. It's also something that we've factored into our plans. We still think there's about 12 to 30 billion in outflows that we'll see from the countries neighboring Switzerland, and we've built that into our projections for the business going forward.